Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, earlier this year, you and Alan Barry Labucan conducted a zombie search and rescue mission which flagged a junior called Tri-Origin Explorations as a rescue target. The company announced this week that it and its partner Sumitomo have started a drill program on their South Abitibi project. What sort of discovery can we expect from a zombie junior?
Well, Jim, let me first explain what I mean by a zombie junior. What Alan Barry and I have been doing is going through the juniors and looking for companies that are trading below 10 cents and that have less than $200,000 working capital. Most of them have negative working capital. And we basically use it as a strategy to show our audiences how you start to research some cheap stock that, may go up 10, 20 times or may simply die. And with Tri-Origin, when we came across this one and looked a little closer, it turned out that it did not truly qualify for having less than $200,000. It had shares in a company that it had spun out. It was cheap because it has over 100 million shares out. But when we looked a little closer, we could see that the management headed by Bob Valiant has assembled 5 projects, all of them conceptual early-stage projects on which it was busy. And one of them was the South Abitibi venture, in which Tri-Origin formed a joint venture with Sumitomo last year, a 50-50 joint venture, which requires Sumitomo to spend $4.5 million. Now, this project is interesting because it's to the southwest of the silver cobalt mining district, which was discovered in the 20s and has produced an awful lot of high-grade silver from veins. Now, this area to the southwest has been problematic for the exploration sector because there is a younger, the target deposits are in the Archean greenstone belt, VMS deposits, and also big gold deposits like La Ronde and Bosquet. But the problem with this area is that there are younger outpourings from the Proterozoic that have covered the prospective ground with about up to 500 meters of basically garbage rock. Now, in the cobalt district, it is not garbage rock. Something happened there that remobilized the deposits in the Archean and created these high-grade silver cobalt veins, which have been mined since the 20s. And what the theory that Bob Valiant came up with is that with new geophysical techniques that can penetrate below 500 meters, it's time to take a look at this area from a geophysical perspective and see if we can see Archean-aged deposits underneath these barren cover rocks. And the reason they can do this now is that for much of the last 30, 40 years, this area was off limits to exploration thanks to the Bear Island land caution.
Now, what exactly was the Bear Island land caution?
Well, this area to the west of Cobalt is the territory of the Tamagami First Nation, and they had their differences with the government about territorial disputes and their various entitlements and so on. So they registered a land caution, which resulted in a moratorium being put on this whole area with regard to exploration. And over the next 20, 30 years from 1973 onwards, they negotiated with the government, got their various concessions, and this area was gradually opened up to exploration. But because it's tough exploration, prospecting doesn't find you much. There's nothing there except these younger Proterozoic rocks at surface. And, of course, the geophysics couldn't really see. Most of the area has 200, 300-meter thick cover rocks. So not much was done during that period. But now that Sumitomo and Tri-Origin have tackled it, last year Sumitomo spent $600,000 on an airborne EM survey, and that became the basis for focusing on what they call Target Area 1, which is about a quarter of their land package that they have staked. And in an area of 8 kilometers by 4 kilometers, they have done ground IP surveys and identified a number of targets, IP targets, that potentially represent sulfide bodies. And they have just started a 3,000-meter drill program consisting of at least 6 holes, and they expect it to be done by mid-November with assays early December. So this is a high-stakes, high-risk, high-reward potential play where monster deposits that simply weren't visible to past exploration methods could come into sight as a result of this joint venture finally taking a fresh crack at this area. And Sumitomo is a big Japanese company. They are interested in big discoveries, base metal VMS deposits, or the massive sulfide or disseminated sulfide deposits such as Bousquet and La Ronde, which have 10 million plus ounces in them.
What would count as discovery news?
Well, at this point, we would love to see some hole that intersects, 30 meters of massive sulfides enriched with base metals and gold, silver, or perhaps even a disseminated version of that with gold in it. But realistically, since they know nothing about the bedrock underneath this 200-300 meters of cover rocks, what we hope to see is anomalous values showing that this area is indeed fertile. Because one of the interesting things is, unlike in the Cobalt District, where it is believed that much of the mineralization came from existing deposits, older deposits being remobilized, some speculate as a result of a diabase dike that came in there and provided the heat engine. It's a question here that was there simply no diabase dike in this area which remobilized existing deposits, or was this area simply not fertile for the formation of these deposits in the Archean? And so evidence that there is an elephant to be found in this part of the cobalt plate, that is what Sumitomo and Tri-Origin are looking for at this stage. But of course it would be great if they got a discovery hole right away out of one of these IP targets.
Another junior called Calonex Mines reported results from its Pine Bay project in Manitoba that caused the stock price to jump. As I understand it, Pine Bay sits within a district known for its VMS deposits. Is there a new discovery taking shape at Pine Bay?
Well, the Flin Flon district was discovered in 1927 by Hudson Bay. It straddles the boundary between Manitoba and Saskatchewan. 100 million tons of ore have been hauled out of this area from multiple deposits, some of them large, 10 million to 20 million ton deposits, others smaller, typically high grade with zinc, copper, and gold and silver enrichment. Hudson Bay is currently mining the 777 deposit, which was discovered in the 90s, 20 million tons. They chase these things down deep. In the case of Pine Bay, it sits to the east of the 777 deposit. It received work in the 60s and 70s. 1 million tons was outlined in one zone. A couple other small deposits. Placer Dome looked at this project and was going for 30 million ton deposit. Found some zones, followed up what the earlier people had done, but gave up. The hole that was reported this week was an extension of an old hole. They didn't have to extend it very far, but they managed to intersect high-grade volcanogenic massive sulfide mineralization. And by itself, this doesn't mean anything, but the significance of it is that Placer's earlier interpretation that the zone pinched there, that it wasn't there, has now been negated by this new hole, this new evidence that it is worthwhile to chase these zones down and come up with the goal here is not likely to be a 30 million ton deposit, but if you can come up with 5 to 10 million ton zones of high grade zinc, copper, gold, silver mineralization, that can become mill feed for the Flin Flon facility. So this has given the whole stock Calinex a bit of a bump, and this will enable them to raise additional money to continue exploring. And most of this is deeper drilling, using downhole geophysics to identify deeper sulfide targets, and then drilling the expensive angle holes to intersect these zones, because the stratigraphy here is tipped on its side. And these volcanogenic massive sulfide deposits are formed basically by smoker systems on the ocean floor, with the fluids coming up and creating a sort of a big alteration zone underneath and stringer mineralization, and then just piling up the sulfides with hopefully enriched with base and precious metals on the ocean floor, building up, and it provides these big lenses. And in this case here, it's been tipped on its side. They can see extensive alteration on what would be the bottom part, I guess the cone of an ice cream cone that's been tipped on its side. And now the trick is to find these lenses down the plunge and see if they blossom in a way that they didn't at the surface.
We'll have more Discovery Watch with John Kaiser right after the break.
GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com. GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back to Discovery Watch with John Kaiser. I'm Jim Goddard. Vendetta Mining has a massive sulfide zinc project in Australia where they just wrapped up a drill program. This is also a known system like Pine Bay. Is this the start of a discovery worth watching?
Well, the Pegmont system, it's in northern Australia, in Queensland, in an area where substantial zinc mines have been developed. This project itself is about 20 to 30 kilometers from a couple of operating mines, the Cannington in particular. The Pegmont system itself was first looked at in the 70s. Various groups looked at it. It delivered predominantly lead mineralization with a lower zinc grade. The initial approach was to drill shallow, to look for an easy high-grade deposit that could be developed. That wasn't obviously the case. These types of deposits are formed also, like volcanogenic massive sulfide deposits, on the ocean floor, basically smoker systems where the fluids are rich with lead and zinc, spew out into the water and then settle down and form these horizons of massive sulfide mineralization. And depending on where you are in the system, it'll be more lead than zinc, or the vice versa. And at the time when they encountered a higher lead grade, they weren't that interested because the world had plenty of lead. They were more interested in zinc. And in 1995, this project ended up being taken over by a small Australian junior, and they spent the next 15 years looking at developing the zinc oxide resource that was near surface as a bulk tonnage target. And zinc oxides are difficult to process. From a metallurgical perspective, what you want are sulfides. And when you have the sulfides, what you hope is that there aren't too many of the toxic metals, heavy metals such as cadmium and that in it. The smelters don't like those. You want what is called a clean concentrate. Well, this other company spun its wheels, couldn't really get anywhere, used some unorthodox recovery flow sheet to try and figure out, eventually gave up, and Vendetta optioned it several years ago. The terms are not easy. They have to spend money each year to earn 100%, and this year they had a critical breakthrough, because the theory was that this, what was originally a nice flat pancake, has been folded in this area, and they were tracking for additional folds, and they were also hoping to find an improvement in the grade of the zinc within the mineralization. And in Zone 5, they have established that this zone exists. It is sulfide. That portion would be an underground mine. The zinc grades are now approaching the lead grades, and they hope to have a resource estimate out by the first quarter of next year. And their target ultimately is a deposit in the 10 to 15 million ton range. Probably what they've done so far could deliver 6 to 8 million tons, and their goal is to have a 9% combined lead zinc. And while this is not a huge deposit, the exit strategy here is to have this project be acquired by one of the nearby mine operators, for example, Cannington, truck the ore to their facility, and then ultimately the concentrates can be trucked to the Mount Isa smelter that's also in Queensland. So I think this is shaping up to be a meaningful discovery. Their next goal is to spend $3 to $4 million and deliver a PEA by the end of next year.
Vendetta financed this year's program with a private placement of 50 million units at a nickel. What's next, and how will it finance it?
Well, this is a serious question for the company. They have about $250,000 working capital left. They have a $350,000 property payment coming in February 2017. And I talked to the CEO, Michael Williams, and said, what did it feel like this year in May having to do a 50 million unit financing at a nickel with a full 10-cent warrant for a company that only had about 26 million shares out at the time and qualified as a reasonably tight structure. And he admitted this was an extremely painful experience, but it was necessary. He believes that the zinc cycle is finally in the making, after years of people saying, yep, it's happening next year, and then it not happening. And he had two pressures. One, he had spending and cash payment requirements, plus he needed to prove these theories that Peter Voulgaris, his key geologist, who's an expert in that region, had come up with. They needed to prove to the market that this tonnage potential is here, and they needed to be in a position to advance this project so that it could be bought in the next couple of years by one of the neighboring entities when zinc prices spike through $1.20 and the concentrate shortages that are already starting to develop in the world become acute. And so, yes, it was very painful, and right now his strategy is to raise $3-4 million. Part of it will come by coaxing the warrant holders to exercise early. 30% are held by RCF, which is a private equity group, and another 10% is by Solitario, which is a public company that has started to accumulate royalties and ended up selling its gold project in Nevada last year, so ended up being cash rich. Obviously, he'll have to come up with some sort of incentive to encourage warrant holders to exercise early. And it is a problem having this big overhang of warrants because new money does not want to come in and bankroll a project and give warrant holders a free ride. So this is a challenge for the company, and it'll be worth watching. The results from this year definitely make it worthwhile to pay close attention that this is a discovery that's turning into reality.
We've been talking about medium tonnage exploration targets. Is there anything new with smaller tonnage but high-grade gold worth watching?
Well, Don Moore and Neil Briggs of Playfair Mining have latched onto an Irish gold prospect, which they believe is very similar to Dalradian's Coronalt gold system, where there are several million ounces have been outlined at 10 gram per ton and better. Within quartz veins, a series of parallel veins, fairly narrow, and Dalradian is advancing this through various feasibility studies. The Dalradian project is in northern part of Northern Ireland. There's a belt of rocks which include the target host rocks called Dalradian rocks, which extends about 100 kilometers to the southwest. Playfair has optioned 100% of the Ox Mountain project, where there are some outcropping quartz veins. They believe there is a similar potential as Coronalt, and they have just started a 2,500 meter drill program in this area, basically farm area, rolling hills, farms, and so on. And they will drill a series of angle holes through these targets, which geophysics shows there are structures there. The geophysics, of course, doesn't tell you whether there's any gold deposits there. So this is a very important drill program which will tell them whether the structures are indeed present and whether the mineralization they've found at surface continues anywhere at depth.
Doing a private placement without a warrant's very unusual. I've heard say that an investor would be a fool not to insist on a full 5-year warrant. Is Playfair bluntly being financed by a pack of fools?
Well, Don Moore has been adamant about never granting warrants. This current drill program is being funded by a private placement of 15.7 million shares done at 5 cents in May. They raised about just under $800,000. Normally these days when we see a 5-cent financing, there is a full warrant attached, and sometimes we see them as with terms of 5 years. Warrants are supposed to be an incentive to encourage investors to put up the money, accept the 4-month hold restriction, and then get the sweetener if the company is successful. That they end up with basically twice as much stock. Say, in this case, a 10-cent, typical 10-cent warrant. You buy 100,000 units at 5 cents. So you have 100,000 shares, and then you have 200,000 shares at the end of the day if the stock's at $1. But in reality, what happens? Investors typically dump their long position as soon as they can, and then just sit on the warrant as a free ride. And my own view, and I share Don Moore's view in that, is that when people buy shares in a private placement, they should be placing a bet on the fundamental success potential of the project, in this case, Ox Mountain, and management's ability to competently make or break this potential. And this idea of unloading the long position and getting a free ride doesn't really signal that you believe the project has fundamental potential or that management is able to deliver. So I regard investors who insist on 5-year warrants as essentially fools for, in effect, backing a project whose potential they do not really believe in. Because when you have these long-term warrants hanging over the market from groups that have just basically become freeloaders, it is very difficult to raise additional money unless your results have been so spectacular that it is a no-brainer for new money to come in at better prices. So I would say that when you see people putting up money through a private placement that does not include warrants, these are the opposite of fools. These are people who have looked at the fundamentals, looked at management, and said, this can be a winner, and maybe it's not easy to buy stock in the market, maybe it's fairly illiquid, so they are taking a position in a relatively illiquid stock and betting on a long-term fundamental success.
John, thanks for the update.
Thanks, Jim. It's been a pleasure.
Discovery Watch will be back next week. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.